3% dividend yield, and they increased their revenue last quarter. Hello?
What's up, bro? What you up to?
Nothing much, man. Just researching a few stocks.
Alright. You ready for elections next week? Man, I sold all of my stocks, man. I cleared out the whole portfolio. I went straight to cash. I even bought SPY puts. Man, I'm shorting the market, man. You know, YOLO options.
I don't know, man. Everyone keeps saying the same thing. But I like the prices I'm seeing right now. I'm buying the dip. Yeah, I'm buying the dip.
What? You're wildin' right now, bro. Haven't you seen all these YouTube videos? All the YouTubers are saying the stock market is gonna crash, man. Yeah, man. After election day, everything's gonna go down. The Andre Jakes, the Jeremys, you know, all their videos. Stock market crash, part 2, 2020. Yeah, man. Get your cash ready.
No, don't listen to any of that, man. It's just clickbait. Why would you sell your stocks? Didn't I tell you to watch my guy PPC Ian? Focus on building your portfolio instead of trying to make a quick buck.
What?
Hello? 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 Welcome to Think Money with Benny. Here on the channel, we talk about investing in the stock market to produce passive income. If you're new here, I talk about how I grow my portfolio, what strategies I use, which stocks I invest in. That's what my content is all about. If this interests you, click the subscribe button so you don't miss any of my upcoming videos. And don't forget to hit the like button to help support the channel. Today, I'm going over my Fidelity portfolio to show my stocks, the gains, losses, cost basis, all that fun stuff. Before anyone thinks I'm putting up my portfolio because we had one of the best weeks all year, this is what I said in my previous video last weekend. My next video is going to be a portfolio update, so stay tuned for that soon. I like to be transparent and show my positions if I talk about a stock. I'm not one of these YouTubers that hype up stocks with no money invested. If I don't see your account in your videos, then it's all suspect. That's all I'm gonna say about that. So here's my 6-figure portfolio in Fidelity investments. Not Robinhood, M1, Webull, or any of that nonsense people are pushing these days. We're in Fidelity, a great brokerage that does the job right. If you're a new subscriber and not familiar with how I got to this point, let me just say I've worked my ass off to build up this portfolio. They say getting to 100K is the hard part, and I'm here to tell you it's true. I started my account from 0 2 years ago. I wrote down reach 100K as a goal, and I got there deposit after deposit, grinding, learning, researching, watching, asking, listening, doing, teaching. My next goal is getting to 200K. I'm not interested in trying to hit home runs, YOLO options, Forex, Bitcoin hype, trying to get rich quick. None of that BS. For me, that type of behavior is not sustainable long term. The ultimate goal is creating passive income, meaning I don't have to do anything to generate cash. So with that being said, I made some adjustments to my portfolio by cutting losses on 2 stocks. AT&T and Geo. Those were stocks I bought last year as a new investor looking to get a nice yield. For a while, they just hung around not doing much, which I was fine with as long as they paid the dividend. Up until recently, the share prices kept depreciating, and I found myself dollar cost averaging into sinking ships. However, I'm at the point now where I've grown as an investor, and I can say, okay, those were mistakes. Let me take that capital and use it to sell options to make back the losses, which I've already done in a short amount of time. It's all about learning from mistakes, right? So what did I learn? Stay away from potential yield traps and focus more on the competition. For example, I wanted to believe AT&T was going to turn things around quick, but their streaming service is really no match for Netflix. And with their wireless service, There's just so much competition out there with T-Mobile, Verizon, plus all the debt they're carrying with that awful DirecTV deal. It's just not a good look, and it wasn't a good look in my portfolio. I'm glad to have cut the cord on AT&T. At least the big dividends helped offset the losses on both of these stocks. I also sold shares of Qualcomm and Caterpillar, mainly because I only had 15 shares of each, and I felt like their prices were too high. I didn't see myself buying at these levels, and I wanted to take profits. I also saw this as a chance to lower the amount of positions in my portfolio. I'll wait patiently for an opportunity to get back into these two down the road. Jumping into the portfolio, going from the smallest value to largest, first up is VYM, recently added and my favorite dividend ETF. My vision for VYM is for it to be one of my largest holdings that targets dividend income. Next up is Mr. Softy, currently up 31%, but I only own 12 shares, so I'll be looking to add over time, or if we get a dip under 200. Johnson & Johnson, at 20 shares now and looking to add. Anytime this stock comes down, it's a no-brainer. A defensive stock that holds down the fortress. Pepsi, another stock I don't have to worry about. I can just keep adding shares at my own pace. Currently at 26 with a cost basis of 130. Also recently added, and one I'm very excited about, the triple Qs. The reason for QQQ is because I want all the big tech. I want Amazon, I want the Facebooks, the Google McDougals, Mr. Softy, Apple, Tesla, but I just can't focus on trying to manage all of these stocks. QQQ allows me to invest in all under one roof. I jumped in with 14 shares, sold one just to take profit on the quick run up, leaving me with 13, already up 9%. Also, for those wondering, I don't use margin to borrow. I use margin to trade, which lets me avoid free ride and good faith violations. If you're an active investor that trades often, then you know trading tight margin is the way to go. Triple M is a company I like at these prices and is more of a dividend play for me. Currently at 31 shares with a cost basis of 154. It's always nice to own a dividend king. Starbucks I like buying because we all know it's America's legal dope house. I've been rushing to pick up shares here in the 80s before it returns back to the mid 90s. I'm trying to reach 100 shares soon, currently at 61 and up 15%. Realty Income, the monthly dividend REIT, I'm looking to double my share count to 200, which will bring in about $50 monthly in dividends. I'm just waiting to see if the share price might fall a little lower in the coming weeks. Next up is Wynn, and I have to say, this stock has treated me very well. I've already booked more than $1,500 trading Wynn. Right now, I'm holding 100 shares, up 7%. I really like Wynn for the wheel strategy, and as I talked about in my previous videos, I see it as a great turnaround play. AbbVie is an interesting one. The price action has taken me for a roller coaster this year, but the growth potential is there, the nice dividend is there, and they just reported a great earnings with a 10% dividend raise. Unfortunately, come Monday, my 100 shares will be called away due to selling a covered call at the 89 strike. But when I factor in the premium received, it'll be more like I sold my shares around 90. It's all good though. I'll just run the wheel on AbbVie and sell puts at a lower strike than my original cost basis. Easy money. Now, my largest holding in a stock is none other than one of the greatest companies in the world, Apple, sitting at 130 shares with a cost basis of about 102. I knew I wanted to make Apple my largest holding, and I saw an opportunity the week before elections. This was all part of my plan to restructure my portfolio as I begin to integrate my dividend income strategy with running the wheel selling options for passive income. This will help grow my portfolio as I continue to make deposits, making the snowball bigger and bigger. And last is a position which a lot of people tend to neglect, the cash position. Currently at 41K, which is roughly 40% of my portfolio. It allows me to be ready to make moves in the market or to take advantage of the market downturns. It also allows me to sell cash covered puts. Needless to say, it just gives me a lot of options. I like being 20 to 40% in cash at all times. That's how I got through the crash in March as a new investor who didn't panic. There you have it, my 11 positions in my Fidelity account. I hope this portfolio review helped you get insight into how I build a solid dividend growth portfolio. If you have a question you'd like me to answer, just comment down below and I'll gladly answer it. I hope you got value from watching this video. If you did, go ahead and smash that like button, subscribe if you haven't already, and I will see you in the next one. Peace.